Questions? Okay, well, it was great speaking with y'all, and my preferred broker is Smart Trade FX. That's my preferred broker of choice. We love their low spreads, they instant execution, they have no requotes, and they have a committed staff who are there to give you the best overall trading experience possible. All right, thanks again, Ruben, and give Smart Trade a try. Smart Trade FX. Y'all will really like them as a broker. Okay, BJ, but you can just go to the site and then we can get you hooked up and you can hear everything that you hear on here. Okay, Morgan, thanks for the opportunity. Thanks, Chuck, for the opportunity to do this presentation, and I hope you guys learned something. Until the next time, bye-bye.
All right, great. Thank you very much, and we appreciate you taking the time to be with us today, Chuck. And at this time, I'm going to turn things over to our next speaker, is Tony Peterson. And Tony, if you want to come on and do a quick audio test, we appreciate you being here. Again, Tony's been a frequent guest. Hey, there you go. Tony's been a frequent guest at the Trading Pub, and we appreciate him coming on here today to talk about high probability pullback trades. Tony, you can take it away.
Hi, everybody, and welcome. And I want to thank Morgan, Chuck, everybody at the Trading Pub for allowing us this opportunity. I know it's probably been a long day for some of y'all. Been here for a few hours and a lot of good information. And so we're going to keep things rolling right along here. We're going to talk about some things that are a little bit different than maybe what some of the other speakers have been talking about, and maybe something a little bit different than what you've ever seen or heard before. Always looking for a little different perspective on trading. We get a lot of people that come in looking for a different ideas or ways of thinking about the trading, or ways to approach trading. And so we're going to go over something that may be a little bit different for you. First of all, let me tell you about me real quick. I was not born into being a trader. I didn't start off as a floor trader. I was a residential contractor for a little over 20 years. I got bitten by the trading bug, just like many of you all do. For the first 7 years of my trading career, I did pretty much the same thing. I followed pretty much the same path as most traders, right to the point of getting real close to exiting trading and having to go back to just looking for a job. Basically, I sold my construction business. I dedicated myself to trading. I struggled for a long time. Then something really big happened, and began to turn it around. And for a little over 6 years now, I've been trading full time for a living. Uh-oh. Can everybody hear me okay? I'm assuming everybody can. Okay. Jeff doesn't need to hear this. He's hear this every day anyway. All right, great. All right, so I've been a professional trader, trading for a living for a little over 6 years now, and because of that, because I kind of came through as just like everybody else that has struggled with trading or come into trading. And I've developed some friendships along the way, met people in trade rooms that I was trying. We ended up Skyping together. As I suddenly I tried this experiment. This is the big thing that happened to me, and things started getting better for me. That my trading friends, my Skype friends, wanted to see what was I doing, why was I different all of a sudden, and so I started teaching them what I had figured out and what I had learned to do, and ultimately, to help my friends, I started trying to figure out how to develop indicators, and so to make it even easier. And so that part of the intentional trader business has just kind of grown. It's kind of taken on a life of its own, and it's actually one of my my most favorite parts of what I do. Trading is just something I do to make a living. The education and the development part is really where I have the most fun and get the most satisfaction on a daily basis. Just want to let you know of something coming up here, and if you all will take your mouse and you can click right here on the chart, right there on that link. I don't know if you can see my mouse. I don't think you can. Let me grab this pointer. Right here on this link right here, it is clickable. This is the same link. This is a sign-up form for an event this Saturday at 11 a.m. Eastern Time that we're going to have that is going to express more, in much more detail, what we're talking about today. We're only going to be able to kind of glance over some of the high points today. And I know that you're likely to have a lot of questions, and I may not be able to get to many of them today. So if you will click, this is in Omnovia, this link is actually clickable. You can go sign up for our event this Saturday. On every slide hereafter, you have this link right here. This is the same link. So at any point during the presentation, you can click on this link and sign up for our event this weekend. Which will just expand on what I'm talking about today. All right, so we're going to talk about how you approach trading and whether your results are more like a gambler or are they more like the house. Now, you hear trading being compared to gambling a lot, and trading with an edge and trading with percentages. But I'm here to tell you that as the person who's participating in gambling, yes, that's gambling. As the house, as like the Las Vegas and all the other casinos, the name of their industry is gambling. But that's not what they're doing. They are not gambling. They have an edge, and they know over a period of time what their edge is going to play out over the long term. Okay, so what is an edge? Okay, the edge is typically expressed as a percentage of a wager when we're talking about a casino that the house has over a player. All right, now this edge is typically very small, but also very profitable. I don't know how many of you have been to casinos, and whether you gamble or not, you can sit there and watch, and it's amazing that if you have a slight edge, a very small edge, and look at some of these margins that the house has, and if you look at those very slight edges, and now look at Las Vegas, look at the money in Las Vegas that they spend to attract people to their casinos. You can see how a very small edge can be parlayed into tremendous profits. Okay? So how does the house maintain its edge? All right, so they have this edge, right? They go into, they design their system, right? Their gambling system, and they create an edge. They know they have an edge. Now, they have to maintain this edge by following a strict set of rules and procedures, right? This is their system. All right. Now, how do they use these rules, and they're simplified, and then they're divided up so that they can be easily followed by the personnel who may be unfamiliar with some of the complex formulas involved in creating this edge. Okay, it is not important for the employees or the personnel who are actually administrating the system to fully understand every single thing that's going on. They just have to know their little part, right? And then once they know how to do their part, right, then it just becomes routine, and they follow these rules. They follow this routine. Now, do you think that Vegas could continue, or any casino, of course gambling is everywhere now, but do you honestly think that they could maintain these edges if they allowed for the people who are implementing the system any type of discretion? Like, a blackjack dealer decides, you know what, I'm feeling lucky. Even though I have a 17, I'm going to hit. Right? How long do you think that dealer is going to last? All right, so again, this is the edge. The house has an edge, and it's broken down into a set of procedures or rules that become routine. Okay? So how can you get an edge? Right? How can that's the big question. Okay, yeah, everybody understands. Okay, an edge is a good thing to have. How do you get one? So in trading, you've got several different things that people tend to use to create a trading edge. Okay? So first of all, we're going to have some indicators. Then with those indicators, we create some setups. With those setups, we have general rules or specific rules for entering those trades. And then with that combined and where all of those come together, we can create a trading system with an edge. Okay? All right, so as an example, here's an example of a trading system with a tremendous edge. All right, and this is the pullback trade that we were talking about. Now we've got a bunch of indicators here on our charts. In and of themselves, indicate when a certain condition exists. All right, but that does not make it a setup. When we get a trend established, we get a building of confluence of these non-correlated indicators. I'm going to talk about this a little bit more in a minute. These non-correlated indicators, meaning that they're a bunch of indicators along with support and resistance that are confluent or reach a level of confluence and suggest to us all at the same time that we're going to have a pullback. All right? So this is a very typical system that has an edge. Every time this happens, you can anticipate a pullback from the trend. All right? Every trend has a series of pullbacks. And so a lot of people may consider this system a counter trend trade. You can call it whatever you want because the trend is down, but the actual setup, the buy, or the trade is a buy, counter trend. However, it is dependent upon the trend. Okay, so I need a downtrend in order to put on this, what people might call a counter trend trade. I don't call it a counter trend. I call it a pullback to the trend. And then ultimately after the pullback, and I take my little piece of that trade, I don't really care what happens to it. All right, so we've got our trend. We've got our confluence of our non-correlated indicators, and then a pullback. Right? This is something we see every day, all day long. I see a number of people in here that have been doing a free trial in our trade room, and feel free to jump in and say if or let people know what you've seen in the trade room over the last week, that these are not cherry-picked examples of what we see. We see the same thing every day. Okay? So why do pullbacks give us more obvious trade signals? Okay? The behavior of a pullback is much more predictable. All right? It is very precise, so that the timing is very easy. Meaning we don't create trades. We don't study the charts. We wait for a setup to show up that looks like what I just showed you. Okay? So there's no discretion involved for identifying when the pullback is going to happen. The discretion is relative to your risk tolerance. Okay, so there is some discretion, but it's only relative to your risk tolerance. If you want to be, or if you are, a very conservative trader, you can trade the pullback system. If you want to be very aggressive, you can also trade this system. You just have to define your level of risk tolerance. But the entries for each level of risk tolerance are very easy, very straightforward, and you just sit, I call it waiting on the bus. We don't create trades. We're not studying charts. We're not trying to figure out what's going to happen next. We're not trying to read the future. I'm not watching the news. I'm not doing anything but reacting to the information that's coming into the market at this exact moment. Okay, so it's more objective, meaning we don't have these difficult chart patterns to try to figure out, you know, whether the head and shoulders pattern is developing and then it fails, or we have a double top that is a double top and then it's not. and any number of different chart patterns that look good in hindsight, but when you're trying to make a trade decision are often very difficult to read. Okay. Also very easy to design a pullback trade system and create a set of rules that give you the edge, right? Because these pullbacks are very predictable in nature. Every trend has a series of pullbacks. Okay? So it's easy to pinpoint with our real-time indicators. Real-time means that they're indicating on data that's coming in right now. They're not suggesting something might happen in the future. The indicators that we use to help us with these pullbacks are telling us in real time what conditions exist right now. When those conditions exist, it's time for a pullback. Okay? So indicators don't tell me to do anything. Indicators tell me a condition exists. All right? So as an example, here's another pullback. This is one of our setups. This is called a speed flash setup. I talked about these in the trade room today. We had a number of these in the trade room where we've got an overbought condition. We did have a condition here, but it did not qualify for a setup because we didn't have a major line of resistance. Okay, so we want to have support and resistance. So we've got a speed tick, which is based on order flow analysis. We've got our ricochet, which is divergence. Uh-oh, you can't see the chart? Anybody else can't see? Okay, all right, great. We have another indicator called a ricochet that is pulling its information. It's kind of a relative volume, although it's not really true volume, but it's a relative volume indicator. When all of these start to come together to create confluence, along with a strong hard push up, a strong line of resistance, we have our relative strength indicator for resistance, and all of this confluence here suggesting a pullback happens every day, all day long. All right, this is what we trade every day, these pullbacks. Another example, same thing. Again, we see this every day. We get a sense of a pullback developing. All right, so sometimes it's very quick. Sometimes you have to be on the ball to enter a pullback trade like this. Sometimes you get plenty of notice when you see it coming. And I'll say in the trade room, I'll mention, here's what I'm watching. And if you've been in the trading room for more than a week or so, you already know what my next move is going to be. All right, you already know that at the close of the speed tick bar, I'm likely to enter at the open of the following bar. Again, it all depends on the conditions and my risk tolerance levels, which may be different than yours. And there's another example of a building pullback. We get confluence, we get a pullback. We entered at these indicators print on the open of the bar or in real time. When the condition occurs, they print. So at the open of this bar, before all this happened, we got this lightning bolt looking thing, which is divergence, right? And then we get our pullback. So we use our indicators a lot, and we count on them a lot, but we do not use them to make decisions for us. Right? The best indicators are the ones that give you the most information about what your competition's next move is likely to be, with the least amount of effort to read and understand what that indicator is telling you. All right? So here's our philosophy on designing our indicators. We want to make sure they're very clear. We want to remove clutter from the charts. We're going to look for as much confluence as I'm showing you a pullback system that you can do either with our indicators or with your own, but I'm showing you how it works with ours. So we're going to strive for confluence of a set of indicators that are based on different sources of information, all right? So non-correlated information. So for an example, Here's a chart that many of you might look very familiar, and in fact, most of these are items that you can get straight out of NinjaTrader that you can use to develop a pullback type of a strategy. Now, what we do is we take a lot of this information and we create what's called our heads-up display indicators, which removes a lot of the superfluous information that you don't need and only puts the information on the chart that you do need, which is predicting a pullback. All right, this is telling us to anticipate a pullback. And we use support and resistance, which is extremely important to us. So why do we use confluence? All right, confluence, let's look at the definition of confluence. I got this right out of Investopedia. This is my definition. All right, so it's a combination of multiple strategies or ideas into a single strategy. All right, so it occurs when many things that are very different from each other actually come together and create a system or a strategy. Okay. Here's a little bit simpler way of looking at it. So what you want to do is find a series of non-correlated indicators, and what we use sometimes you might consider price and volume and order flow, momentum, support and resistance, all getting their information from very different sources. However, they're all suggesting the same thing. When they all come together, all in agreement, suggesting that a pullback's going to happen, then we have confluence. When we have confluence, we build confidence, okay? Not just in the indicators, but in our ability to trade the setups based on those indicators, okay? So most of us that have been on the hunt for the holy grail of trading or a system or whatever, you know all you need is confidence that when you enter a trade or when you enter a number of trades, the confidence that you're going to win that trade more times than you're going to lose that trade. That gives you a level of confidence entering a trade. All right? So again, confluence is the key to trading pullbacks. All right? You've got to have a number of different indicators suggesting the same thing. If I allow just one indicator, one thing, tell me to enter a trade, I am reducing my opportunities there. I am reducing the chance that that trade is likely to be a winner. All right? So we have, in this example, we use RSI. All right? So this is something you got right out of NinjaTrader. You can use RSI. Now we use them to we put them right on our candlestick. You can put an oscillator down at the bottom if you want. Makes it much more difficult to read. So we make it a lot easier. We put it right on the candlestick. When we get this pink outline, we know we're in an overbought condition. Okay. So we're overbought here. There's one item of confluence suggesting a pullback. We've got order flow analysis based on time and sales suggesting that the HFTs are likely going to work here. Okay? That's what this little white arrow is. It's suggesting that there's likely to be an HFT at work. That was what precipitated this big move here. The ricochet, which is a high relative volume, suddenly came into the market. When we get this high relative volume, very often we're going to get a pullback. All right, so we're building confluence here. All right, volume spread analysis. That's these dots here, right behind that ricochet. These dots again suggesting that we're going to have a pullback. All right, and I could talk an hour about volume spread analysis. Our flash indicator, which is divergence. Again, all of these things are available, or most of them are available in some form or fashion of indicator that you can get on any charting platform. What we try to do is make it easy, make it simple, make it right in your face, right there, so you can't miss it. Okay, so all of that stuff builds right in front of you. you can see the pullback building, right? And then we have support and resistance. And again, more of the same down here at the bottom. Right? Again, the same type of thing that we see all the time. Every trend has a pullback or series of pullbacks. Pullbacks are much easier to identify than trend tops or bottoms. They're also much easier to trade than trying to trade a trend, particularly if you're a single contract or small volume trader, very conservative, somebody who gets nervous, somebody who tends to bail out of a trade too early or hang on to a trade too long. Pullback trades are much easier to trade than trend trades in that regard. And we can do this on any type of chart. I get a lot of questions. We trade the 1 minute charts, but you could trade it on an hour chart, tick chart, range chart. It doesn't matter. Okay, Rinkos. It doesn't matter. You can trade there's pullbacks on any type of chart, any types of. Just all you have to do is spend the time to put it all together as a system, develop that system, and make sure that you tune the things. Like the volume spread analysis and the speed tick. Depends on the time frame in the market. You may want to change some settings around. All right. So we use major lines of support and resistance, just floor trader pivots. All right, so you can use floor trader pivots. We add some things to our floor trader pivots to help you identify which ones are going to work the best. So we add a relative strength to the line of support or resistance. We also add a zone, a support and resistance zone. All right, so again, it's all about making it easy, making all of this very heads up. Okay. I think we're going to go into more about support and resistance this Saturday. Remember, I'm having to rush through some of this. There's an awful lot of information to go over here. If you'll come on Saturday at 11 a.m., make sure you register, and you can click right here. Make sure you register and get signed up, and we'll go over a lot of this in a lot more detail. Here's a quick example on how we use our indicators to help us to determine. Now, here's common, and this is to build a system. Trading pullbacks, you're more than welcome to use. You can use this RSI. When you reach an overbought condition, we would anticipate that price wants to pull back out of that overbought condition. Okay? John, we record it, so if you register for it, we'll make sure you get a recording. We can send you the recording, but you got only to the people that registered. We'll send that out to. So what we like to do, though, rather than have to take up our space on our chart here for an oscillator just to tell us when these conditions exist, we'll get rid of all that and put it when that condition exists, when it gets overbought, we'll put it right on the candlestick, right here so we can see it real easy. All right, same thing with divergence. Again, using the RSI for divergence, you might sometimes see something like this if you've got a divergence indicator. We're going to try to clean up the chart and make it easy to read when divergence exists. All right, so when you see divergence again, this prints at the open of this bar. When you see divergence print on the open of the bar, you can anticipate if it prints underneath the bar, you can anticipate price is going to go up. Okay. Same with our speed tick indicator. Again, using order flow analysis. And we use the speed tick as really our trigger for a lot of pullbacks. You'll see we'll get a big hard push and a speed tick, suggesting that this is a very likely an HFT type of a move. And very soon after that, we'll get a pullback. Okay, very common. Another setup that's very common. This is our speed flash setup here. Big hard push, overbought condition, speed tick, flash, and down. This is I'm actually developing an auto trader on this setup right here. And yet another pullback, a very powerful setup that we have. Again, we'll go into much more of this on Saturday. I'm going to go quickly. This is a reminder for this Saturday, and we do have a special going on. And we're going to let you guys come into our trading room for free and see all of this in action. You can come check us out this Saturday, listen to what we're doing. I'll go over everything that we've talked about today, but in much more detail. If you want to sign up for our free trading room, you can start tomorrow. It goes until the end of the week next week. Click this golden ticket right here. This little ticket right here should link you right to our registration for the trade room. If it doesn't, if you have a problem with that, contact Lisa, and she'll get you the link to register for the trade room. You can come in and see exactly how we do these pullback trades every day, all day long. All right? There's an awful lot to go over here. There's an awful lot to learn about how we trade these pullbacks, but they're much, much easier to trade, and they definitely give you an edge when you're trading. I don't think I have any time left for questions, so I enjoyed it. I appreciate the time. Thank you all for coming this afternoon. Thanks, Morgan and Chuck, for the opportunity, and hopefully we'll see you all this Saturday.